Mr. Avinash, Gorakshakar, Director, Research at Profitmart Securities, into the conversation. Now, as Amit pointed out here, this quarter is likely to be a weak one for, IT companies due to seasonality factors, higher than usual furloughs and weakness in discretionary demand. What's your take on the entire pack? What are your key expectations from IT companies this time around?
Yeah, good morning, Suyash. See, first of all, as far as the IT sector is concerned, as your colleague rightly mentioned, the third quarter numbers are going to be muted because broadly demand continues to be weak. And I think anyway, the third quarter is always considered to be a lean quarter. December is a very soft month for IT companies. So I think clearly, as it is, if you look at Infosys, if you look at, TCS, I think numbers in the second quarter were quite, bad. In fact, my sense is that TCS could show a sequential decline in revenue, and we could at best expect EBITDA margins to be maintained. But any improvement in EBITDA margins looks to be very tough. As far as Infosys is also concerned, I would believe that here also sequentially one could see a decline in revenue. And I think now the markets would be looking at, the kind of commentary coming out from these management, specifically in terms of new deals, in terms of new client additions, and obviously in terms of what kind of new products, specifically on artificial intelligence, machine learning, because these are the promising spots where demand continues to be quite promising. And another fact which could be interesting for your viewers, Suyash, is that next year is going to be an election year in the US. Typically, whenever there is an election year, IT budgets get delayed by corporates, and I think that means the recovery for Indian companies, from the US markets would take a little longer. I would believe that yes, most of the concerns are already built into the prices. But for a strong recovery to be expected, I think it could have to wait for at least the second half of the next calendar year. And that could definitely be a little tough. I think IT companies could remain lackluster for some more time. And I think clearly very few promising, outperformers could come in. I think although we are very positive on the mid-cap IT space, especially companies like KPIT, Persistent, but the large cap IT companies definitely would continue their sluggish show as was seen in the second quarter.
And you mentioned that the all eyes will be on the commentary coming out from these companies. Do you expect further cuts in revenue growth guidance this quarter, considering that discretionary spending has not really picked up in the US?
No, I think very much possible, Suyash, but I think broadly, I think markets would be, if at all there are further revenue guidance cuts, from the large cap players, that is definitely going to mean a significant amount of derating for these stocks. Uh, Quite frankly, I don't expect any further kind of guidance cuts, but if at all they do come, then I think it's going to be even more bad. Obviously, from the large cap companies, order book inflow has been pretty slow, and as I mentioned to you, the coming year being an election year is going to be a more tougher year for these companies. So recovery is going to be very slow. I think my sense is that's the reason execution has been very slow in these companies.
Uh, Good morning, sir. You mentioned elections, and there are two big elections in two big economies this year, and they are staggered. One is in the first half of the year, and the other one is in the very later half. So, do you think it is only time to buy and keep right now, or it's just wait and watch for investors? Because it's a staggered election, they're not happening at the same time.
No, I think broadly, if you are talking about only the IT sector, Amit, then I think one can wait and watch. My sense is that there is no need to hurry for getting into IT companies, despite the fact that valuations appear to be attractive, but growth quotient continues to be uncertain. And unless growth comes back, I don't think these stocks are going to go up in a hurry. So my sense is, as far as IT is concerned, it's better to wait and watch and understand the commentary, understand the demand scenario, because as you mentioned earlier in your points that the demand is weak, and I think it's unlikely to change at least over the next 1 or 2 quarters.
All right, that's the view coming in from Avinash. But quite a choppy bit of movement we have seen, at least so far, in equities generally in 2024. In 2023, if a sector was moving, all the stocks were moving. Is it time for us to take a more bottom up approach, considering that a lot of these sectors, a lot of these themes have already played out?
No, I think it will be a bottom-up approach, Suyash, because see, broadly, if you look at the index, my sense is the index appears to be slightly, pricey, very little, upside on the index level. But on the broader market, There are many sectors like real estate, capital goods, infrastructure, cement, auto components. I think there are many pockets of opportunity where one can take a bottom up opportunity. And I think, markets obviously give you a good stock specific opportunity. The earning season, which is now going to start, from tomorrow, obviously will throw lots of opportunity. So I think it's going to be a bottom up approach. You rightly pointed out that it will be more of a stock specific bottom up approach. And clearly, I think, domestic facing sectors, I believe would do well. The overseas export oriented companies, I think still the headwinds continue to be quite strong.
All right, and I also wanted to get your view on the FMCG pack. Now we have had Q3 business updates from some of these companies, and it looks like it will be more of the same. In the first 2 quarters, we saw that rural demand was lagging. This time around, business updates and commentary coming in is also showing that it will still going to lag. And especially this time around, we were expecting a pickup in demand considering it was festive season and the wedding season. What's your outlook on the entire FMCG pack, and when do you think this rural recovery will finally take place?
No, I think Suyash, looking at the business updates from most of the companies, I think one thing is very clear that rural demand still continues to be weak. And I think that is going to be that volume growth is going to be quite minimal. And I think unless volume growth picks up in the FMCG segment, I think it is unlikely that these companies would be reporting a significant improvement in margins or in profitability. So my sense is, I think you would probably see a flattish quarter. Most companies have been trying to cut corners by cutting costs, by cutting overheads. But I think the real kicker is the volume growth. And that I don't think is going to happen till the month of February or March. I think possibly the next 1 or 2 quarters could be tepid quarters like the first half. And I think most of the valuations, across FMCG companies are extremely, expensive. So I would not be in a hurry. I would probably wait for another couple of months before we take a stock specific call. But I think within that, Godrej Consumer, Marico, these are companies where I believe, current valuations appear to be good, but I think the risk reward will happen only over the next 12 to 15 months.